People love to tell themselves, I'll do it someday. Someday I'll start saving. Someday I'll start investing. Someday I'll take control of my money. Let me tell you the truth. Someday isn't on the calendar. It never has been, and it never will be. The longer you wait for a perfect moment, the further you push your dreams out of reach. Time is not your friend when it comes to money. It's your most valuable partner. And once it's gone for good. Every delay costs you more than you can imagine, not just in dollars, but in opportunities, freedom, and peace of mind. The people who have wealth today didn't wait until it was convenient. They acted while others were still thinking. You have the same chance right now, but it won't wait for you. When you keep your money idle, it's not just sitting still, it's working, but not for you. The bank is lending it out, companies are using it, and other investors are putting it to work to make themselves richer. Meanwhile, you're left holding the same amount, watching prices climb higher and your buying power shrink. If you aren't putting your money to work, you've already agreed to let someone else enjoy the rewards it could be earning for you. Think about that for a second. The paycheck you work hard for, if you don't make it grow, it's building someone else's dream. The question is, whose dream will you fund? Yours or theirs? Imagine waking up in the morning and realizing your money earned more while you slept than you made at your job that day. That's not fantasy. That's the power of investing. Your money doesn't get tired. It doesn't need breaks. It doesn't call in sick. When you send it into the world with a job to do, it can work 24 hours a day, 7 days a week, in markets and opportunities that never close. But here's the catch. If you never put it to work, it will never bring anything back. This is the difference between people who struggle their entire lives and people who create financial freedom. Which one will you be? Money grows like a tree. You don't get instant fruit. First you plant the seed, then you water it, protect it, and give it time to grow. The earlier you plant, the sooner you can rest under its shade. But if you keep waiting, there will come a day when you'll wish you had started years ago. You'll be standing in the heat, watching others enjoy the comfort you could have had. The truth is, no one can plant for you. That's your job. The sooner you start, the better your harvest will be. There are basic rules in the money game that, if followed, can change your entire life. Ignore them, and you'll pay for it, sometimes without even knowing it. These rules are not suggestions. They are the foundation that keeps your finances strong, no matter what storms come. They protect you from the mistakes that drain people's savings and destroy their chances at wealth. If you know them and live by them, you give yourself the best shot at financial independence. If you ignore them, you set yourself up for a lifetime of struggle. The world of investing doesn't care about your plans. It doesn't pay you for your dreams. It only rewards you for action. You can read every book, watch every video, and talk about investing for years. But until you actually take that first step, nothing changes. The market is full of people who said I was going to invest, but never did. And now they're wishing they had. Action is the bridge between where you are and where you want to be. You don't have to start big, but you do have to start. The only question is, will you move today or keep talking about tomorrow? Every year you wait to invest, the cost isn't just the money you could have made, it's the years you can never get back. Time is the most powerful factor in growing wealth, and when you lose it, you can't replace it. Waiting 5 years to start could mean having hundreds of thousands less later in life. The price of delay isn't obvious today, but it becomes painfully clear when you reach the age where you hope to retire and realize you're still far from it. The truth is, you can recover from a bad investment faster than you can recover from not starting at all. Picture two people. The first starts investing at 25, putting in a modest amount each month, and letting it grow. The second waits until 40 to begin, telling themselves they'll make up for lost time by investing more later. Decades pass. The early starter ends up with a comfortable fortune, living on their own terms. The late starter, even after putting in larger amounts, they never catch up. Why? Because the early starter had something the late one couldn't buy, time for their money to multiply over and over again. That's the power of starting early. Many people say they'll invest when they have extra money. But here's the hard truth. You may never feel like you have extra money. Life always finds ways to spend what you earn. Bills, unexpected expenses, family needs. There's always something. If you keep waiting for a perfect financial moment, you'll be waiting forever. The truth is, you can't afford not to invest, because if you don't, your future will cost you far more than you can imagine. Think of money like a worker. It can be out there in the world earning you more, or it can be sitting around doing nothing. When it's sitting, it's actually losing value, like a worker who eats all day and never produces. The more you keep it idle, the more potential you waste. But when you send your money to work in investments, it starts bringing back more money. And unlike you, it doesn't get tired, doesn't take weekends off, and never asks for a vacation. Inflation is sneaky. It doesn't take your money from your hand. It takes it from your future. Over time, prices rise, and the same dollar buys less and less. If your money isn't growing faster than inflation, you're slowly losing purchasing power. A coffee that costs $2 today could cost $4 in a few years. If your savings don't grow, you're moving backward. That's why keeping money just sitting in a bank account isn't safety, it's slow loss. When you don't invest, you don't just miss the gains, you miss the doors that could have opened. Early investors often find themselves with enough capital to start a business, buy a property, or seize a once-in-a-lifetime opportunity. Those who never start are stuck watching from the sidelines. By the time they feel ready, the window has closed, and the chance is gone forever. The truth is, opportunity rarely waits for latecomers. If you don't invest, your only source of income is your own labor. That means if you stop working, the money stops coming in. But when you invest, your money starts generating income without you having to clock in. That's the difference between living paycheck to paycheck and having financial freedom. If you stay in the work for money cycle your whole life, you'll always be trading time for dollars, and one day you might not have the time or the health to keep going. Every day that passes without you investing is a day you can never get back. Time is the one resource you can't earn more of. If you started yesterday, you'd already be ahead. But since you can't go back, the second best option is right now. Waiting until you feel ready is like waiting for a bus that already left the station. You don't need perfect timing. You just need to start moving. The earlier you begin, the more your money can grow, multiply, and work for you. Most people think you have to start big to see results. That's a lie that keeps people from ever beginning. Wealth isn't built by giant leaps. It's built by steady steps. A little invested regularly can turn into a lot over time. Just like walking a mile starts with a single step, building wealth starts with your first contribution. Small beginnings create habits, and habits create results. Over time, those small amounts grow into something powerful enough to change your life. You don't need to risk everything to start investing. In fact, you shouldn't. Just like learning to swim, you start in the shallow end, where mistakes are small and lessons are safe. By starting small, you learn how markets move, how investments grow, and how to handle ups and downs without fear of drowning. The people who fail in investing are often the ones who jump straight into deep waters without learning the basics. Start safe, build skills, then go deeper when you're ready. It's not about the number, it's about the pattern. Whether you start with $5 or $500, the act of putting money into an investment regularly builds the muscle you need for wealth. The habit is more important than the amount, because habits keep going long after the excitement fades. When you make investing automatic, like brushing your teeth, you remove the temptation to skip it. That's how small numbers grow into big results. If you keep waiting for the right time, you'll keep waiting forever. There will always be a reason to delay: bills, expenses, uncertainty. But while you wait, prices rise, opportunities pass, and your future slips further away. Ask yourself honestly, If you don't start today, when will you? And when that day finally comes, will you wish you had started sooner? The answer is always yes. Starting small now and staying consistent will beat starting big later almost every time. Why? Because your small start has time to grow and multiply over the years, while a late start has to play catch up. Compounding rewards the early and punishes the late. Even if you start with very little, if you keep going, your early start will often outpace someone who waited for years before making a move. There are countless stories of people who started with almost nothing but ended up with financial freedom. One young investor began by putting away just a few dollars each week into a simple investment. It wasn't glamorous and it wasn't instant, but over decades that small act turned into a comfortable retirement. They didn't win the lottery or stumble into a big inheritance. They simply started small, stayed consistent, and let time do the heavy lifting. That's proof that you don't need a fortune to start building one. Money doesn't care about good intentions. It rewards skill, preparation, and discipline. The market isn't a friendly neighbor who forgives mistakes. It's a tough arena where the unprepared pay tuition in the form of losses. If you step in blind, you're not investing, you're gambling. The people who succeed are the ones who take time to learn before they leap. Why education must come before action? Think about any skill: driving a car, cooking a meal, fixing something in your home. Would you just grab the keys, turn on the stove, or swing a hammer without knowing what you're doing? Probably not. Yet many people put thousands of dollars into investments they barely understand, hoping it will just work out. Hope is not a plan. The smarter move is to learn the rules first, so your decisions are based on knowledge, not luck. Playing chess without knowing how the pieces move. Investing without education is like sitting at a chessboard with no idea how the pieces work. You might make a move that feels good in the moment, but you can't see the trap waiting 2 moves ahead. Meanwhile, your opponent, the market, knows exactly what it's doing. In chess, lack of knowledge means losing the game. In investing, it means losing your future. Understand the building blocks: stocks, bonds, real estate, and more. Before you invest a single dollar, you need to know your options. Stocks can give you ownership in companies. Bonds lend your money in exchange for interest. Real estate lets you profit from property. There are also index funds, mutual funds, and countless other tools. Each has its own risks, rewards, and role in your portfolio. When you understand the building blocks, you can design a strategy that actually works for you, instead of throwing money into something you barely grasp. If you don't know where your money is going, it's already gone. The moment you invest blindly, your control is gone. You're leaving your financial future in the hands of chance. If you don't know exactly how an investment works, how it makes money, and what could make it lose value, you've already lost half the battle. Every dollar should have a job, a purpose, and a clear plan for growth. If it doesn't, you're not investing, you're just spending. The power of compounding, your greatest ally or your biggest missed chance. Compounding is the force that makes the rich richer, not because they work harder, but because they understand how to make their money grow on top of itself. It's interest earning interest, growth feeding growth. But here's the catch: if you don't understand compounding, you might misuse it or miss it entirely. That's like owning a sports car but never learning to drive. Its potential wasted. Your next step: one book, one course, one trusted resource. You don't have to become a financial expert overnight. You just have to take the first step toward understanding. Read one good book on investing. Take one beginner course. Talk to one trusted mentor. Each step adds another piece to the puzzle, making you stronger, smarter, and more prepared. The sooner you learn, the sooner you can invest with confidence instead of fear. Every worthwhile journey comes with uncertainty. In investing, risk isn't something you can avoid. It's the price you pay for the chance to grow your money. The key isn't to run from risk, but to understand it, respect it, and use it to your advantage. The people who win in the market don't eliminate risk, they learn how to manage it so it works for them, not against them. The fine line between boldness and recklessness. There's a difference between taking a calculated leap and jumping off a cliff blindfolded. Boldness is moving forward with a plan. Recklessness is hoping the plan will magically appear after you've already made the move. Both involve risk, but one is measured, intentional, and thought out, while the other is a gamble. In money as in life, the line between bold and foolish is often drawn by preparation. Driving fast on the highway, safe with rules, deadly without them. Imagine driving at high speed on a highway. If you know the road, follow the signs, and respect the limits, you can arrive faster without crashing. But if you ignore the rules, speed through blind turns, and close your eyes to the risks, you're headed for disaster. Investing works the same way. The speed, the risk can get you to your destination sooner, but only if you know how to handle it. Risk wears many masks. Inflation risk means your money loses value if it sits idle. Market risk means prices can drop. Sometimes suddenly, opportunity risk means missing out, because you were too afraid to take a chance. The last one is often the most dangerous. You may not see the loss, but every year you delay can cost you far more than a bad investment ever could. Fear can protect you, but it can also chain you. If you avoid all risk, you also avoid all growth. Your money stays safe in the short term, but it quietly loses power over time. That's not safety, it's slow decay. The truth is, you can't have reward without risk, just like you can't swim without getting wet. The goal is not to stay dry, it's to learn to swim well. The real danger isn't risk itself, it's walking into it without knowing the terrain. Blind risk is throwing your savings into something you don't understand. Intelligent risk is doing your homework, weighing the pros and cons, and deciding if the potential gain is worth the potential loss. One destroys futures, the other builds them. Before you invest in anything, ask yourself, what's the worst case scenario? Can I live with it? How much could I lose and how much could I gain? How likely is each outcome? Measuring risk doesn't make it disappear, but it makes you aware, alert, and ready to act wisely. The more you learn to measure risk, the more confidently you can take it. Putting all your money into one place is like standing on a thin branch. It feels fine until the wind changes. One bad turn, one unexpected crash, one sudden shift, and the branch snaps. You can't control the market, the economy, or global events, but you can control how exposed you are. Spreading your risk means that if one investment falls, others can hold you up. Think about a table. It doesn't balance on one leg, it stands on four. Take away one leg, and it can still stand. But if you only have one and that one fails, everything on it comes crashing down. Your wealth should work the same way. Stocks, bonds, real estate, businesses, each one is a leg. Lose one and the others keep you steady. Sometimes the worst thing that can happen is early success. You pick one investment, it does well, and you start to believe it will always do well. That's when overconfidence blinds you. People have watched their entire fortunes vanish because they believed one stock, one property, or one business would carry them forever. But no matter how golden it looks today, the market can turn tomorrow. When diversification saved investors from disaster in 2008, when real estate collapsed, people who had everything in property lost nearly everything, but those who also had stocks, bonds, or businesses saw losses in one area, softened by stability or gains in another. It didn't erase the pain, but it kept them in the game, and staying in the game is the key to long-term wealth. When lack of diversification destroyed fortunes, remember the people who invested their life savings in just one tech company during the dot-com boom. When the bubble burst, billions in paper wealth disappeared overnight. The same happened with oil investors during price crashes, or with cryptocurrency holders during market dips. One bet feels exciting when it's going up, but it feels like a trap when it's going down. What happens if your one golden goose stops laying eggs? If all your income depends on one source, you're at the mercy of that source. What happens if that stock drops? If that property loses tenants? If that business faces competition or legal trouble, the golden goose might stop laying eggs. And then what? A diversified portfolio means you don't just have one goose, you have a whole farm. Build multiple income streams and asset types now. Don't wait for disaster to teach you this lesson. Build different streams, investments that pay dividends, properties that earn rent, businesses that generate cash flow, and safer assets that protect your wealth. The more pillars you have holding up your financial house, the harder it is for anything to knock it down. Diversification isn't just protection, it's freedom. It gives you room to breathe, adapt and thrive, no matter which way the wind blows. Making money is good, keeping money is smart, but growing money, that's where real wealth lives. The secret: reinvestment. When you take the profits your investments earn and put them right back to work, you create a cycle that builds on itself year after year. This is the difference between people who have a little money and those who build life-changing wealth. Planting seeds and replanting the harvest. For a lifetime orchard, imagine planting an apple tree. When it bears fruit, you could eat every apple and enjoy a short feast. But if you take some of those seeds and plant them again, you'll have more trees next year, and even more the year after that. Eventually you're not picking apples, you're walking through your own orchard. That's what reinvesting does. You don't just eat the harvest, you expand it. The trap of short-term consumption versus the power of long-term growth. The biggest danger isn't losing money, it's spending gains too early. Short-term consumption feels good in the moment, the new car, the vacation, the upgrade you think you deserve. But those quick wins steal from your future self. Long-term growth, on the other hand, takes patience, but it pays you back over and over. Every time you reinvest instead of spending, you're feeding tomorrow instead of just satisfying today. How dividend reinvestment turns decades into millions. Take someone who invests in dividend-paying stocks. At first, the payouts might seem small, just a few dollars. But if they automatically reinvest those dividends, those few dollars start earning their own dividends. Over decades, that snowball effect turns a modest start into a massive sum. The same applies to rental income, business profits, or any stream of earnings. Put them back into the system and watch them multiply. Do you want a quick snack or a lifetime supply? Let me ask you, would you rather have one meal now or an endless pantry for the rest of your life? That's the choice you make every time you decide whether to reinvest or spend. The snack satisfies your hunger today. The lifetime supply takes care of you forever. Wealth is about choosing the pantry over the plate. Why reinvesting feeds compounding like nothing else. Compounding is often called the eighth wonder of the world, but it only works its magic if you give it fuel. Reinvesting is that fuel. Every dollar you put back in becomes a worker in your financial army. Over time, those workers recruit more workers, and your wealth doesn't just grow, it accelerates. Automate reinvestment and remove the temptation to spend. Here's the challenge: humans are tempted. The easiest way to beat that is to remove the choice. Set up automatic dividend reinvestment. Roll rental income into buying the next property. Redirect business profits into growth instead of personal luxuries. When it's automatic, you don't give yourself the chance to sabotage your own future. Let your money keep working, and it will work harder than you ever can. It's easy to get excited when you make a big win, but wealth isn't built on one lucky strike. It's built on showing up over and over, when the wins are small and the excitement fades. A single burst of brilliance might make you feel smart, but steady action over time beats any one-time hero move. Wealth rewards endurance, not just talent. You don't get abs from one workout. Wealth works the same way. If you hit the gym once and expect a six-pack, you'll be disappointed. Financial growth works the same way. It's not about one perfect investment or a lucky year. It's about building and maintaining habits that work for decades. You can't cram success into one moment. You earn it layer by layer, day by day. The silent killer of portfolios, emotional decisions, fear and greed, are the two emotions that quietly drain portfolios dry. Fear makes you sell when prices drop. Greed makes you chase trends when they're already overheated. Both pull you out of the game before your strategy has a chance to work. The best investors keep their emotions in check and stick to the plan no matter how loud the headlines get. Don't just start. Don't just try. Stay. Starting is exciting. Trying feels productive, but neither matters if you don't stay. Staying means you hold through the boring seasons, the bad headlines, and the market dips that make others panic. Staying means letting time do its work. In the long game, the ones who stay end up owning the board. The investor who won by refusing to quit during market storms. I know an investor who put money into the market in the early 2000s, right before a crash. He saw his portfolio drop by almost half. Most people bailed. He didn't. He stayed invested, kept adding, and refused to sell in fear. Today that portfolio isn't just recovered, it's multiplied several times over. He didn't win because he was the smartest. He won because he stayed. The market pays the patient. Are you willing to wait? The market doesn't pay the fastest. It doesn't pay the loudest. It pays the patient. Those who think in years, not minutes. Those who can watch their money work without needing instant proof it's working. The question is, are you willing to wait long enough for your wealth to show up? Think in decades, not days. Stop asking, what will this do next week? Start asking, what will this be worth in 20 years? Thinking in decades forces you to focus on the big picture. It keeps you from making rash moves, and it frees you from the noise that distracts short-term thinkers. If you can master patience, you've already beaten half the game. You've heard the 6 rules. They are not suggestions. They are not maybe later ideas. They are the difference between living free and working until you can't anymore. You get one chance at building the future you want. One chance to decide if you'll take control or keep letting life decide for you. No excuses. Not anymore. Start today, because tomorrow is already late. Every day you wait is a day your money could have been growing. The perfect time will never arrive. The market doesn't slow down for you to get ready. You don't have time to keep thinking about it. You have to move. If you don't start today, you're already behind tomorrow. Inspiration without action is just entertainment. Feeling fired up means nothing if you leave here and go back to doing the same thing. Inspiration only matters if it pushes you to do something different. If you walk away from this and change nothing, nothing will change. But if you take one step today, you start a chain reaction that can rewrite your entire financial story. The seed in your hand could become a forest. If you plant it right now, you're holding the seed of your future in your hands. It could grow into a forest that feeds you, shelters you, and provides for generations. But if you put it back in your pocket and do nothing, it dies with you. The choice is yours.